From the floor of the CME Group, this is Danny Riley on today's Cash Close. And the name of this video, Stops, Stops, and More Stops. The high of the day in the S&P just came in at 2005 half just now. The low came in at 1988 half mid-morning. And last, we're 2005 half. We're up 7.5 handles. Total volume, we've got 1.6 million minis traded, with 415,000 of that coming from Globex, with 3.9 thousand big S&Ps traded in the pit. MOC, big time MOC, you guys. The MIM right away before 2 o'clock, even before the data started filtering in, was showing $1 billion to buy, 950 million to buy. And then just as the MIM turned on, it flipped over to 1.25 billion to buy. Now, whenever we've seen this in the past, we always suspect that there's more to come. And the actuals came out 1.5 billion to buy to 1.9 million to buy. That's gigantic stuff. Now, look, next week, we have about half or 50% of the economic releases as we did this week. And we've got a total of 15 economic reports. We've got 11 T-bill, T-bond announcements and auctions, and we've got 1 Fed Bank governor speaking. Now, I know that, when I talked about the morning report this morning, I got to go with the Pitbull when he starts getting a little nervous. But, the other part about it is that you got to go along with this stuff. Investors' intelligence was showing 13% bulls. That's not good. And that goes off. The last time it got to 13% bulls was in the 87 crash. So these are kind of spooky things. And I think it all led up to today's jobs number, where the S&P, the number came in a lot lower than expected. The S&P acted accordingly. It sold off. But again, what happens, you guys, is when you get 415,000 minis traded in Globex before the 8:30 open, that means to me that everybody already sold. And what happens is those sellers, they put in buy stops because they can't hold over the weekend. Now, what happened is the S&P rallied a little bit, then it went back down to the Globex lows and held, and now it just went ripping back up into the highs as we're talking. Now, I've got a question for you, and this is related to what's been going on Wall Street for a long time, and a lot of these supposed great traders that came out of these Wall Street brokerage firms. Now, if you knew and you were sitting on a desk and you knew that you had $1.5 billion to buy in stock on the close, do you think that wouldn't have had an effect on the way the markets traded throughout the day? I think it would. And I think it's got a lot to do with why the S&P rallied as much as it did, is because there were big orders that are being entered on the buy side. And there was no way that after running the downside stops that the S&P had anything else to do but to go back up and run those buy stops. And that's exactly what they're doing. This is all called algorithmic trading. That's where they run the buy stops, run the sell stops, and run the buy stops again. Now, the last thing is, I want to just say one last little thing. I think that what's going on here is that what happens is when the sentiment turns and people get short, they tend to all do it in bunches. They all do it at the same price. And as I've tried to explain, the S&P never does what everybody wants it to do when they want it to do it. As far as where the S&P is going now, I think it's going back up. We're only 6 handles off the contract high. And additionally, I think it's really, really important to start looking for the Pitbull's Thursday, Friday low the week before the expiration. That said, you guys, it was a good week. I had a good week trading. I didn't mess it up late today, as I always do on Fridays. Never my good day. But that said, you know what? I'm ready to attack this thing next week, and I'll see you guys then. Have a great weekend.